All right, well, it looks like um, it's just about that time, so we can go ahead and get started. Good morning, everyone, and welcome to this open enrollment webinar. My name is Lindsay Bernard. I am the Communications and Growth Manager at 24 Hour Flex, and today we're going to be talking all about flexible spending accounts, how they work, why you should even care about them, and sort of what to expect when you enroll in an FSA, because sometimes people can understand what it is, but not necessarily how to use it, or vice versa. So hopefully we'll answer all of those questions for you. To set expectations, this webinar should last only about 30 minutes, and we will have time for questions at the end. Again, we'll go over all of the useful features and tools of an FSA and hopefully answer all of the questions that you have. But if anything comes up during the course of our meeting, please feel free to submit any questions using the chat feature, and I will address all of the questions that are received at the end of our meeting. So with that being said, thank you all for being here again, and let's go ahead and get started. So first, let's talk about what a flexible spending account even is. So in short, an FSA is a benefit that's intended to help save you money on money that you would already spend. So anything that you're paying out of pocket during the year on medical, dental, vision, or daycare expenses even, an FSA is intended to help you save some money on those out-of-pocket costs. It's a benefit that allows you to put aside a portion of your income pre-tax to use on eligible expenses, which I'll talk about a little bit more in a minute. And by enrolling in an FSA and putting that money that you would already spend into a separate tax-free account, it gives you access to all of your same money, but it saves you hundreds, if not thousands of dollars each year on those costs that you're paying yourself. If you're like me though, and those are just a bunch of words and you need an actual visual example to help you understand this, let's take a look at this picture here. So John and Jane, they're both employees at the same company who they make the same salary, $35,000 a year, and conveniently for our example, they both have the same monthly costs for healthcare, which includes medical, dental, and vision, as well as for dependent care or daycare, childcare. John, our first guy over here, he does not have an FSA. So he simply pays his bills from his normal paycheck after taxes have been taken out for that full amount that he was paid. As you can see, his paycheck this time around, the taxes that were taken out equaled $256. Jane, on the other hand, she was really smart. She planned ahead. She looked at her expenses for the year and was like, you know what? I'm going to put aside what I know reasonably I will spend in the next year into an FSA. And because she did that, she simply pays for her healthcare and daycare expenses from her flexible spending account. Now, since the money she puts into her FSA comes out of her paycheck before taxes, it reduces her taxable income. So the amount that she pays is only $196 instead of $256 like John. So as a result, after they both pay their bills, they look at how much money they have left, and Jane is actually left with $60 more than John each paycheck. And if you add that up over the course of the whole year, that adds up to a savings of about $1,400. So you can see by putting, oops, I'm skipping ahead here. Little sneak peek of where we're going next. You can see by putting that money into an FSA, she's saving a significant portion over the course of the whole year. So what are the different kinds of flexible spending accounts? Because there really are two separate plans that you can enroll in. The first is a medical FSA, and the medical FSA you can use to pay for medical, dental, and vision expenses for you and your whole family. So even if you necessarily aren't the one incurring a lot of the cost, but let's say your children have braces, and that's a really big out-of-pocket expense for you, you can use your medical FSA to pay for their expenses as well. And it covers all kinds of healthcare items, so including everyday costs like prescriptions and your co-pays, those more typical expenses. But it can also help you pay for large procedures if you have a surgery coming up, or even if you're getting LASIK done, or if you have large dental expenses. A medical FSA can help pay for those expenses as well. And the way it works is when you sign up for a medical FSA during open enrollment, the period that's set by your employer during which you can enroll, you get to choose an annual dollar amount that will then be deducted pre-tax from your paycheck throughout the year. One of the best features of this account, though, in my opinion, is that whatever you elect, so that whole annual dollar amount, that's pre-funded for the medical FSA as of the first day of the year. And what that means is, let's say you look at your expenses for the next year and you say, you know what, I'm going to elect $2,000 and put that into the medical FSA. That full $2,000 is then available for you to use on the first day of the plan year, even though you haven't contributed that much yet. And that's a fantastic tool, especially if you need a large sum of money up front for a larger expense or to meet those deductible expenses right away. You can use that full amount of your election first thing, and the money simply continues to be automatically deducted from your paychecks in equal portions throughout the rest of the year. Now, there is a maximum, so most you can put aside into a medical FSA in 2018, and this is determined by the IRS, is $2,650. Though I will note here that you should definitely check with your HR or benefits team to confirm your specific maximum, as this maximum amount may vary by employer. Some employers do offer a lower maximum amount, so make sure you check so you know what to elect when you sign up. And now the second type of account, again, these are completely separate. You have the option to enroll in either or both of these plans. Is a dependent care FSA, and this is not for medical expenses for your dependents. Remember, the medical FSA covers you and your whole family. The dependent care FSA is intended to help you pay for eligible daycare services for your dependent children under age 13. And in general, you can pay for any daycare expenses that allow you to work. This includes things like preschool expenses, before and after school care, summer day camps, and much more. Similar to the medical FSA, you get to choose the annual amount that you wish to put aside into this account, and then it is deducted from your paycheck over the course of the plan year. Now, the maximum for the dependent care FSA is a bit higher. It's $5,000 per year. And all that per household note means is that, let's say you have a spouse and they work at another employer and they are also offered the opportunity to enroll in a dependent care FSA. Your entire household combined could not elect more than $5,000. So you could not each elect $5,000 for a total of $10,000. The IRS does set that as a per household limit. Unlike the medical FSA, the dependent care FSA is not pre-funded, so it's important to know when you sign up. It functions more just like your normal checking account, so funds are available as they're deducted from your paycheck and deposited into the account. I will sort of address that last bullet point on the bottom there. Both FSA plans operate under what we call the use it or lose it policy, which means whatever you put into the account for the year is what you must use during your plan year. When you get to the end of your plan year, whatever funds you do not use, you do forfeit and they go back to your employer. So for both of these, it does take a bit of planning, responsibility on your side to make sure that you're only putting into the account what you think you will use over the course of the next year. Now, that being said, keep in mind that not all FSA plans are the same, and they can vary by company. So when you enroll, it's important for you to understand the provisions of your specific plan so you know exactly what to expect. Now, I would recommend talking to your HR or benefits department and confirming 3 things specifically. First, I would ask when your plan year begins and ends, so that you know exactly the period of time during which you need to use your FSA funds. I would also check what the deadline is for you to incur new expenses in a plan year. Some plans do offer an extended period of time, an extra couple months for you to continue incurring new expenses. So for those of you that have that, it's important to know so you know when you can continue spending that money. And then last, I would just check what your deadline is for filing claims. I would say that most FSA plans do offer an extension after the end of the plan year, during which you can file claims for expenses that occurred during the plan year. So, for example, if you had something come up on December 31st, and that was the last day of your plan year, and let's say you paid out of your own pocket, but it was an FSA eligible expense, and you wanted to use your FSA dollars to cover that. An extension for filing claims would allow you to file a claim to be reimbursed for that expense even after the plan year has ended. So make sure that you check on that deadline as well and take note of all these items so that you, again, know what to expect when you sign up for the account. So now you're so excited about the potential of signing up for an FSA. You're upset that you didn't know about this great benefit before, and you decide to enroll in an FSA this year. Now what? How do you go about using the account? How do you manage it? How do you know where your money is? And how do you even use it to pay for things? Well, there are two primary ways to be able to use your FSA dollars. First, to make accessing your FSA money easy, 24-Hour Flex will provide you with a debit card that's loaded with the balance in your account. And you can use the card at the store, the pharmacy, or the doctor's office, really anywhere you're paying for eligible expenses. It functions just like your bank's debit card, so it pulls money directly from your FSA and then pays the provider. If you do use your 24-Hour Flex debit card as your primary method for spending your FSA dollars, though, a pro tip to set you up for success is just to hang on to your receipts for those debit card transactions. And the reason for that is, as your administrator, it's our goal at 24-Hour Flex to make sure that you are staying safe within IRS rules. We don't expect you to remember all of the rules. That's sort of our job on your behalf. And we want to make sure that you're spending your money on eligible items, as opposed to just going and, remodeling your basement or buying a new TV with your FSA dollars. So only when needed, 24-Hour Flex will proactively reach out to you and request that you submit a receipt or an explanation of benefits, whatever you have, to verify that you are purchasing an eligible item with your debit card. And we will always reach out to you. So if you don't hear anything from us, that means that you don't have to submit anything. So if you just make sure to hang on to your receipts, you'll be ready to go if that request comes your way. Another option, let's say if you prefer not to use the debit card, or perhaps your daycare provider doesn't accept debit cards, which we see pretty often, is to pay out of your normal bank account, so pay out of your own pocket, and then file claims to be reimbursed from your FSA. This is what I was talking about earlier for that claims deadline after the end of the year. And you can file claims in a couple different ways. The primary way is through your online consumer portal, which is this picture on the right here. And you'll get access to that as soon as you sign up for the account. I'll talk about that more in a second. If you prefer to do it on the go, though, you can also file claims using the 24-Hour Flex mobile app, which I will also provide more detail on next. And just another pro tip, again, we want to set you up for success with these plans. If you do choose to file claims primarily, please know that our default reimbursement method is to issue you a check in the mail. But you do have the option to sign up for direct deposit in your consumer portal under that profile tab. And by signing up for direct deposit, we can ensure that you get those reimbursements much more quickly and get those funds deposited right back into your account, as opposed to having to wait for that check and then deposit it at your bank. So I would definitely recommend doing that if you are planning on filing claims. So now let's talk about managing your account. How do you know how much you have in your account at any given time? What are some of the tools and resources that are available to you to make your life a little bit more simple? So for both the medical FSA and the dependent care FSA, we offer a variety of online and mobile tools to help you navigate and manage your expenses throughout the year. So like I was saying before, as soon as you enroll in an FSA and we get that enrollment uploaded into our system, you will be given access to your own secure online consumer portal. And that notification will come to you via email, and it will have an initial username and password for you to use to log in, which you will then be prompted to change upon your first login. And in your consumer portal, I would recommend logging in right away as soon as you see that email come up, because if you leave it for later, oftentimes you'll just forget where that email went, and we don't want you to be stuck or have to call us and go out of your way when you need to access the account later in the year. So go ahead and log in as soon as you get that notification from us when you enroll. And in your consumer portal, you can pretty much do anything to manage your account. You can check your available balance, which is managed by the minute. So as soon as you swipe your card, you will immediately see your balance go down. You can also upload receipts, again, like I was saying, to verify that you had a debit card transaction that paid for an eligible expense. You can also file claims, and you can see a history of all of your transactions for the year, including your spending by category. So for those of you that are currently enrolled in the plan and you're wondering what to elect for next year, that spending by category can be really useful because you see exactly where your money went, and it may help you prioritize more effectively for the coming year. If you're like me, though, and you prefer to manage your account while you're sort of running around and you don't always want to be sitting at a desktop computer to manage your account, we do have a free 24-hour Flex mobile app. It's available for any Apple or Android mobile device. And through the mobile app, you can manage all of the most important aspects of your account, like checking your balance, filing a claim. Pretty much it's essentially the mobile version of the consumer portal. But my favorite feature in particular is that if you do get those receipt requests from us, you can submit a receipt using the mobile app simply by taking a picture with your phone. So as opposed to scanning it into your computer and then uploading it, that can save you quite a bit of time and make your life much easier. And then last on this page here, for those of you that are wondering, how do I even know what is and isn't eligible? How do I know what I can spend my FSA money on? Because I have no idea. The FSA store is a fantastic resource. The FSA store is a separate company from 24-Hour Flex, and they are primarily an online store. And the cool part about them is that they stock exclusively FSA eligible items. So everything you purchase from them, you can even use your 24-Hour Flex debit card to do so, is guaranteed to be eligible. And as an added bonus, it will never require receipts, which is helpful. If you don't want to buy anything from them, though, and you're absolutely under no obligation to do so, they do also have the most comprehensive eligibility list available online. So if you have a specific product or service in mind, you could search for it on their website and find out if it's eligible or if it requires additional documentation. Remember, there are some FSA eligible expenses that are only eligible if you have a prescription or if you have a letter of medical necessity. And of course, there are lots of products that are not eligible. So searching for them on the FSA store website is a good way to find out for sure so you avoid any hassle with that item during your plan year. And then last, I just want to remind everyone of how to get in contact with us. We understand that flexible spending accounts can be confusing for a lot of people, and often it takes a bit of specific research for your particular situation. So our customer service team is amazing. I know them all personally, so I can vouch for them. They are very knowledgeable and ready to help you with any questions that you might have. So even after this webinar, if there was something that came up that you would like to speak to someone in person about, you can go ahead and give us a call, email us, or we also have a live chat feature on our website at 24hourflex.com. I also wanted to mention too on our website, if you're currently enrolled and wondering how to do something specific in your consumer portal, we also have lots and lots of training posts that give step-by-step instructions on how to perform basic account features like how to file a claim, how to sign up for direct deposit. So if any of the features that I talked about today were interesting to you, go ahead and search for them on our website, and I can almost guarantee that there will be some form of training material on there showing you how to get that done. And I believe that is all that I have for today. It doesn't look like we've had any questions come in yet, but I'll just hang on for a couple minutes. And if you had any questions, feel free to submit them again via the chat feature, and we'll just hang on for a couple minutes and see if there's anything that needs to be answered. All right, so this first question, just to confirm, the medical flexible spending account does not carry over. This would fall into that category of checking with your HR and benefits department about your specific plan provisions. In some cases, the medical FSA does include a carryover provision that allows you to carry over a certain amount of money. It's not the full amount of your election, and again, that amount can vary by employer. So I would check with your again, your benefits department to see if your specific plan has that carryover provision. The dependent care FSA never has any carryover, so you never have to worry about that. And I would say the majority of plans do not include that carryover. But again, check to see if that medical FSA plan for you specifically does allow for that. The next question, are braces and Invisalign covered under the medical FSA? The answer is yes. Orthodontia is covered. Next question, can I include immediate family members under the medical FSA, or is it just for me? That's a great question. You can pay for expenses for your dependents, so that includes your spouse or any of your dependent children. You can use your medical FSA to pay for their expenses as well. So it is for you and your whole family, not just for you. The next question that came in is dependent care for elderly care too? And the answer is yes, it does cover elder care, including things like in-home nursing services. I would check, give our customer service team a call to discuss your specific situation with that though, as there may be other restrictions in place. But technically, yes, the dependent care does cover elder care as well as child care. All right, well, it looks like that may be all the questions. It looks like there's a couple more, which I'll respond to in a second. I will be following up, and I can send you a copy of the slides if you want. So in my follow-up email, if you would like that, go ahead and request that, and I can definitely send those your way. Oh, let's see. Another question wanted me to go over the first slide again. All right, so we can go back here. Let's see. Oops. Let's go back here. All right. So again, so the purpose of an FSA, again, just kind of going over this first slide again, some people had a connection cut out early in the slides. We do have a couple minutes here, so I'll go over this. The purpose of an FSA, in short, again, the FSA is intended to help you save money on money that you would already spend. So anything that you're paying out of your own pocket, like medical, dental, vision expenses, as well as childcare expenses, the FSA is intended to help you pay for those things that you would already pay yourself. It allows you to put aside a portion of your income into a separate tax-free account for you to be able to pay for those eligible expenses. And by putting that money into the separate FSA, it allows you to reduce your taxable income, and even though you still have that money to pay for those expenses that you would be paying for anyway, doing so with tax-free dollars allows you to save hundreds, if not thousands of dollars per year. The next question that came in is there a difference between an HSA and an FSA? And the answer is yes. Both are tax-advantaged accounts in the sense that they both allow you to put aside tax-free dollars to pay for eligible expenses. And for the most part, the expenses that are eligible under the FSA and the HSA are relatively the same. The biggest differences are that an HSA is privately owned by you and it never expires. So whereas the FSA is an employer-sponsored benefit, so if you leave employment or if you reach the end of your plan year, those funds do have an expiration date or a window of time during which you need to use those. And HSA, on the other hand, goes with you wherever you go. Even if you went to another job, you can take your HSA dollars with you. Your HSA also just continues to build over time. It has a different maximum amount that you can put into the account in a given year. And it also, once you reach a certain threshold, has the potential to be used for investment purposes. So you can take some of your HSA dollars and invest them and grow them tax-free. An HSA, because it never expires, you can also use it into retirement. So some people do use it for saving for the future as opposed to just using it now. And just to reiterate the question about elder care is covered under the dependent care account, although I would suggest calling our customer service team and just describing your particular situation to them, as there may be certain restrictions or gosh, I'm losing the words, but certain expectations that you need to fulfill in order for that to qualify. So I would, but it does cover elder care, including things like in-home nursing services and other expenses. All right, well, thank you everyone for attending. We are out of time. Again, I will follow up with all of you who attended with additional information, and feel free to reach out to me or to our customer service team with any questions. Again, thank you so much for coming, and I hope you all enjoy the rest of your year.